Hi, welcome back to the show. As promised, let's discuss the prospects of the renewable energy sector in this budget. In fact, the government has been extremely optimistic in this sector and is expecting to see at least $200 billion of investments over the next 5 to 6 years as international firms, the government understands, are queuing up to tap the potential in this particular sector. But Sumant Sinha, the chairman and CEO of ReNew Power Ventures, joins us now to talk about just that. Sumant, hi, good morning, and thank you for joining us and taking the time out. First up, what is your own expectation from the budget this time around for the sector?
Well, you know, Sonia, you said earlier before the break that the FM has dropped hints about being positive for green energy. I guess I must have missed those hints. So I don't exactly know what the FM has in store right now. But, you know, obviously, hope springs eternal for all of us. And so there is a lot of hope and expectation from the budget. What we would really like to see in the budget is actually action on 3 different fronts. One is on the fiscal front. I think today, you know, we are subject to MAT, for example, and then there are certain types of investors who are subject to accelerated depreciation. What we would like is some form of levelization of the playing field, which will also help us reduce costs. And if that cost reduction happens, then obviously renewable energy will become much more acceptable to distribution companies, and therefore will allow us to proliferate much more. So I think some sort of reduction on MAT, whether in the form of a generation-based tax incentive or just a straightforward reduction of MAT, I think that is one thing that we would really be looking for. The second really is in the area of financing. And you know, on financing, there's so many things that can be done. Simple things like providing some sort of cover for FX hedging. You know, if you borrow from overseas, hedging costs, as you know, are about 6 or 7%, and therefore they make borrowing from overseas fairly unattractive, even though there's a huge pool of funds out there. And the Indian banking sector is fairly starved to lend to this sector. And so therefore the question is, can the government give us any form of some sort of a FX hedge mechanism that allows us to reduce costs? Or perhaps even some sort of interest subvention, you know, from the National Clean Energy Fund. Something like that could be very useful. Okay. And of course, the creation of something like the InvITs. You know, the InvITs were talked about for the last couple of years, but there are some tax issues right now that prevent them from becoming viable. So is there, you know, I know that the government probably is working on this and hopefully will be able to remove some of the tax hurdles on the creation of InvITs. So I think something like that will also be very positive for people like us to offlay our assets into, let's say, a longer term pool of investors. And really the last thing I would say is, there is a lot of money sitting in the National Clean Energy Fund. You know, at the same time, there are lots of arrears right now that the Ministry of Renewable Energy has to pay out. So can we get a bigger allocation from the National Clean Energy Fund to support some of these activities? I think that would be, those really would be our expectations from the budget right now.
Okay. Sumant, if you can just explain, what are InvITs? I missed that.
InvITs basically, Lata, are the infrastructure investment trusts, which basically allow,
Okay, got that. Sorry.
So, you know, there are lots of tax issues there. So, so therefore the question is, can the government remove those tax bottlenecks, which then allow this market really to take off and really create the, you know, create a domestic yield co-market in some sense.
What is the specific problem with the invest trusts? The tax problems?
You know, there are actually 2 or 3 different problems, Lata, right now. First of all, if you transfer assets from, let's say, a corporate into an InvIT, then, you know, there are some capital gains tax liabilities that may arise.
Okay.
So that is something that has to be removed. The second thing is, as the InvIT then upstreams dividends, or the SPVs upstream dividends to InvITs and InvITs to the final investors, you know, there's a double taxation on the dividend inflow. So that has to be removed. And thirdly, if somebody owns InvIT shares, then today the taxation of those InvIT shares are different from the taxation of equity. And we really want that the fact that InvIT shares and long-term equity should really be treated on par. Okay. And so really those are the 3 areas of taxes that have to be looked at to make InvITs viable.
Okay, Sumant,
and that applies to the entire infrastructure sector area.
Yeah, I guess some of these problems are also common to REITs, but in terms of the tax structures. Sumant, I have a more fundamental question for you. And considering that a lot of lay investors will have that question, let me put that on the table. The cost of generating energy from the renewable space, wind or solar, is more than what it is through conventional energy sources. it's probably the difference is 8 rupees a unit for renewable and maybe 6 or 5 in the case of conventional energy. For a cash-strapped economy, then what is the business case for deliberately going to something more expensive?
Well, that's a great question, and obviously one that we sort of think about all the time. I think first of all, if you look at the conventional power space right now, where fuel costs are fully costed for example, if you have imported coal, their conventional power prices are already trending up to about 5 rupees plus. And that's today's prices. These are not levelized prices. So as the cost of coal goes up, the actual cost will keep going up. Right? In all cases, very often in India, we have conventional power prices being passed through of coal. And so in some senses, they're massively subsidized because they're really giving a resource, a national resource, and allowing people to not pass that through to the end consumer. On the other hand, if you look at renewables right now, wind is perhaps at about 5 to 6 rupees on a fully costed basis and fixed for 25 years. So the cost does not escalate. Solar costs have come down to about 650 to 7 rupees maximum, again fixed for the next 25 years. So if you look at it on the front end, perhaps renewable energy costs are a little bit higher, but over the entire life cycle of a power plant, in fact, I would argue that renewable energy costs perhaps are already lower than where conventional power prices are. And don't keep in mind one very important factor, which is that in conventional pricing, we do not look at the externality of coal. We have so much pollution. All of us in Delhi, for example, are suffering from asthma half the time. There's so much cost as per, according to that, which we don't even take into account. Health costs, other costs, etc., etc. So therefore, if you look at it on a fully costed with full externality-based pricing, I would argue that today renewables is already inside where conventional pricing is at. And so therefore, if anything, we need to encourage renewables a lot more than actually, having this thought in our minds that in fact it's more expensive. Just to give a very quick example, today Coal India, for example, gives coal to conventional power producers at below market pricing. If SAIL, for example, were to give us steel at half the pricing to manufacture our wind turbines, we'd also sell wind power at half the cost. Or if the State Bank of India were to give us capital at half the interest cost, we'd also produce solar power at half the cost. So, it's a question of how we utilize our natural resources really more than anything else.
Okay, that point is very well taken, Sumant. Can you tell us what the expectation is as far as capacity is concerned? How much is the ministry targeting in terms of higher renewable power capacity, say in the next 2 to 3 years? And within that, what about solar capacity? Because I was reading in an article that the government aims to have 100,000 megawatts of installed solar power capacity by, say, 2022 from the present 3,000 megawatts. So that's a big jump that the government is expecting. Are all of these targets achievable?
Well, Sonia, it all depends upon the policies that the government comes out with. I think as an industry, we are certainly geared towards trying to meet those targets. There is a lot of interest among, a variety of investors, both domestic and overseas. The key issue really is the following. Do we have the right policies at the central and the state level? Today, the center is really geared towards encouraging renewables very strongly. And we're seeing a lot of very positive movement. The Ministry of Renewable Energy is very supportive. The Minister is very supportive. I think where we have to see the next level of connectivity happen is with the states, because ultimately it's the state that are buyers of our power. And so therefore the enforcement of the renewable purchase obligations to me is very fundamental to basically helping us meet this target, as well as the improvement of the finances of the distribution companies, because ultimately they have to pay us, and if they don't pay us on time, then of course there is a problem in terms of coming up with new additions and even lenders financing us. So some sectoral issues have to be addressed. But I think the good news is that the government seems to have identified solar and wind particularly as being a key drivers of this target. And even if we don't achieve 100,000 or 150,000 megawatts in these two over the next 7 years, even if we get to half that target, for example, it is still going to be many orders of magnitude higher than what we have currently. And so, I am therefore very positive about the sector in general, because I can see that the government is, at least in this sector, is working very, very hard to make these targets a reality.
All right, Sumant Sinha, thank you very much for taking out time for us and for explaining the rudiments, as it were, and clearing a lot of doubts, both at the end of the studio as well as those who are listening. Thank you very much for joining us. Well, that's a lot of clarity on what it means, why wind energy or renewable energy generally needs to be supported, and what exactly that industry needs at this point in time by way of government help. Well, another sector where perhaps the government is going to lend a helping hand in terms of gas prices is the fertilizer space. Mr. R.G. Rajan, the Chairman and Managing Director of RCF, Rashtriya Chemical